at least not right now. Like, we can figure out long-term location, model, everything.
How are you liking
It's all good, right?
I'm sure you'll find something that's gonna fit your
Yeah, I mean,
goals in life.
it's kind of just like it is right now. I'm kind of getting the balance down so far.
Yeah.
What were you saying in that that last question about insurance?
I used to work for Zurich. I retired in June.
Oh yeah.
Yeah, food processing.
I want to. Are you going to?
We had a database in 70 countries. We had thousands and thousands of people analysts. And so whenever we hear about something, some silly rule, they would say,
They all have.
what's the science? Is there any outbreak in Chile or France or Australia or whatever?
Yeah, she's a really
And then, because they would say it's science-based, and we would,
Is she like the biggest
I would,
right now?
they would do their thing, they'd do your compliance thing, and they'd say, this
But
is
she's
the
a
word.
fluffy.
It's never happened.
Yeah.
Keep doing what you're doing. Zurich, out of Zurich, Switzerland. So they're
Company?
You'll bring
Zurich, yeah, Zurich.
Sunday and just let them go and experience things.
They're in Zurich, Switzerland. They've been around since 100 years old.
So we work worldwide.
No, I just did mostly the West, all food processing, apple packing, and you can imagine anything you can imagine. Bars and apples and pears and baking.
I actually did bring a flyer, I need to post it somewhere.
Yeah, I'm farming folk. So instead of 70 hours a week, I was very, I'm like him, just trying to find a balance. Here, I had 10 more years to work the farm, and then average very good farm, probably 75. So.
Yeah.
And then there's dinner.
Are you doing what's the other?
Program control.
Yes, every
We'll
other
think
week.
about this, but we won't stay.
That's a lot better.
Yeah, because I'm like,
That way I can, you know,
Yeah.
I got everything.
like yesterday.
Yeah.
I do broth, but I do like my brown.
You build, I never the name of the farm, but I didn't realize you build your own farm.
Yeah, well, I just, you know, there was a business shop.
More and more, farms have to give a lot more.
I just did wood panel and heavy industrial.
It just felt like
Here we were, and I asked them, they just didn't stop by.
Okay.
Because there's like,
Yeah.
you still have to have fires.
I think, yeah.
Well, it's be coated with heavy and just, you know, cough and all that.
You don't know if you don't talk, you know.
And then,
Spend so much time in your own little world.
I clean down
Operating how your own little
washing,
or the hot water heater. You're like, you have terrible systems.
You can spray all
good. to
oh, yeah.
Put your mind into other operations.
I've got shelves all up to the top, so.
I don't know, I think they reach out to different farmers.
20, no, but 15, but.
I kind of say with not.
Hi everyone, this is session 5E, Introduction to the USDA Value Added Producer Grant, and Luke from the Northwest Agricultural Business Center will be talking about that. There you go, Luke.
Thank you very much. Hi everybody, my name is Luke Woodward. I'm a project manager for the Northwest Agriculture Business Center based in Mount Vernon. I'm the actual South Snohomish County and King County project manager. And we have the Northwest Agriculture Business Center is a nonprofit that was established in 2006. And it provides Northwest Washington farmers with the skills and resources required to profitably and effectively supply their products to consumers, retailers, wholesalers, food service operators, and food manufacturers. The main office is located in Mount Vernon, where we operate in counties all from Thurston all the way up to Whatcom in western Washington. We provide technical business assistance for farmers and rural businesses, from small beginning family farms to mid-sized established operations, farm-to-market connections that foster and increase farm sales, access to capital through grant preparation, support, and partnerships, regional infrastructure and program creation through leadership and collaboration, Partners include economic development agencies, financial institutions, industry associates, colleges, universities, and successful agricultural and entrepreneurs. And another big thing that we do is NABC is a USDA designated rural cooperative development center. So we work with a lot of agricultural cooperatives and helping them get up and running. We provide workshops and one-on-one client services offered in both Spanish and English. And I am here today to speak about the USDA program's Value-Added Producer Grant, which is an amazing program, probably the best program out there that the federal government has for small independent family farms and farm organizations. And in fact, interestingly, it's one of the only federal grant programs that will actually provide grant money to independent businesses, but they have to be farm businesses. The program does this by providing grants up to $250,000, which is a good chunk of change, and I'll get into more of the details in just a moment. NABC is really passionate about this program, and we've been involved with a number of USDA programs over the years, but the value-added producer grant is kind of like one of our main things. We're quite versed in it. We're really passionate about helping farmers and farm groups access this program as well as other USDA programs in our region. We have a great relationship with the local USDA representatives, and I would like to add that they are incredibly helpful for any USDA grant. In my time that I've been working with NABC, I've been really surprised at just how when you're working on a USDA grant, if you can get it done early, the USDA representatives will actually review it for you and make suggestions, which is really something else. I found them to be nothing but incredibly helpful and nice and wonderful. We have a great relationship with the representatives. We're putting more online workshops on this grant we're putting a more in-depth look at this grant program, online workshop on December 14th, which you can find out about on our website. And I'm sorry, I'm using the USDA's actual slide presentation on this program right now, so I wasn't able to put my own information into it. But if anybody needs, has any questions or wants to follow up after this, please come up to me. I'll give you my card, and you can contact me via email. So yes, on December 14th is going to be more in-depth. It's about a 3-hour-long program on this grant that I really highly suggest you all sign up for, because it'll be very, very informative. Finally, we speak federalese. Yes.
Is it alright if I just interrupt with a quick question?
Sure.
December 14th is a informational meeting?
I'm sorry. There's a workshop on the USDA grant that NABC is putting on. Yeah.
Okay.
Yeah, and if you I can give you my card. If you follow up, I can send you registration for it afterwards. Yeah.
Thank you.
Yeah, you bet. Thank you. And if anybody has any burning questions, that's fine. But there'll be time for questions at the end too. And so if you're interested in any of our services we offer for this program or any of the other services that we offer, again, take my card at the end, and I will definitely follow up with you via email. We have a very high success rate with our VAPG grants that we've been involved with. So I highly recommend you reaching out to us if this is something you're interested in. Without further preamble, sorry, this is kind of a little tight up here. Let's talk about the VAPG program. The Value Added Producer Grant is essentially a grant to help farmers access funding and get their crops turned into something additional and that can be marketed, like jams, jellies. But there's we'll find as we go through these slides that adding value isn't just turning something into jam. There's a lot of different ways that we wouldn't normally think about that or constitute adding value. So the grant, I'm going to just kind of read through I'm going to comment on some of these slides, which is basically read through some of these slides. But the grant, exists to help agricultural producers successfully process, market, and sell value-added products, expand markets for agricultural producers, and strengthen rural economies. There's two types of grants, which there's a planning grant, which it has a $75,000 maximum. And this is I'm gonna take a moment here, this is an interesting breakdown. Hardly anybody applies for planning grants, which is kind of interesting. Most people apply for working capital grants because that will actually go ahead and fund the project that you want to do right off the bat. But as you're going to find, the planning grant is a $75,000 maximum, and it will actually pay for somebody else to do a feasibility study for you on a project that you want to do later, and/or business and business and marketing plans for that product. The working capital grants will provide up to $250,000 maximum for operational expenses. It can't cover production expenses or equipment. But interestingly, like you can't buy vehicles with it, but we'll find out in a little bit that you can actually lease vehicles through this grant program. The thing that should be said about the planning grant is that you're going to see as we move forward that there's one type of pretty common application that the USDA receives that could be pertinent to any of you, that will require you to provide a third-party business and/or feasibility study. But if you apply for the working capital grant that requires this, you're gonna have to pay somebody else to do that feasibility study. Or you can apply for a planning grant, the first year, and the planning grant will actually pay for that feasibility and business plan and financial plan for you, and then you use that the following year to apply for the working capital grant. And we'll go into more detail about that in just a little bit. And there's also a matching requirement to these grants, a one-to-one match, and that's gonna sound kind of onerous at first, but there are pretty simple ways to deal with that match, meaning if you apply for $100,000, say from the USDA for a grant, you're actually applying for a $200,000 grant because you have to provide a $100,000 match to that grant. But as we'll find, that can be via in-kind labor, and the commodity that you're going to be supplying will also qualify for that match. Applicant eligibility. So the applicant has to be an agricultural producer, and that means an individual or an entity directly engaged in the production of an agricultural commodity that has the legal right to harvest an agricultural commodity that is the subject of the value-added project. Agricultural producers may directly engage either through substantially participating in the labor, management, and field operations themselves, or by maintaining ownership and financial control of the agricultural operation. Again, I would suggest maybe just like as we go along, if you have questions, instead of just maybe jot them down and we'll deal with them at the end if that's all right with everybody. The applicant types, independent producers, independent farmers, agricultural producer groups, farmer rancher cooperatives, and majority controlled producer-based businesses. The key with the agricultural producer groups and the majority controlled producer-based businesses is that they have to be comprised of actually independent producers, and we'll get into a little bit more detail about that in a bit. An independent producer is defined as an individual agricultural producer or an entity that is solely owned and controlled by agricultural producers that directly engage in the production and the subject agricultural commodity. Sole proprietorships, partnerships, limited liability companies and corporations, and this constitutes 85% of all the applications for the value-added producer grant that the USDA sees. An ag producer group is a group that represents and works on behalf of ag producers. Here's some examples like the Washington Potato Commission, the National Corn Growers Association. The majority of the applicants' memberships have to meet the definition of an independent producer. So that's the point, is that these have to be membership-based organizations, and a majority of the membership group has to be actual independent farmers. And the same goes, with a farmer cooperative. That's going to be the next group that we're going to see. That doesn't really apply because all the members are farmers. But the majority, and on top of the majority of the applicants' membership needing to be independent producers, the majority of the board of the organization needs to be independent producers as well, if it's a group that's applying. Farmer, ranch, and rancher cooperatives can also apply for value-added producer groups, and that's defined as business owned and controlled by agricultural producers, organized as a cooperative by state law, or as a 521, which is actually a federal designation. Harvester cooperatives are not eligible, but that probably wouldn't apply to anybody in this room. A majority controlled producer-based business ventures. The majority of control and financial ownership is independent producers. This requires eligibility confirmation, meaning the USDA is going to follow up and make sure that the majority of the business venture is actually owned by independent producers, and 10% of the available funds are allocated to this group. So not just 10% of all the applications are from this group, but only 10% of the funds that are made available every year through this grant program are available to this type of an organization. Applicant eligibility. All applicants must currently produce and provide more than 50% of the raw commodity that will be used for the value-added product. I'm going to come back to that in just a second. They must own the product from its raw commodity state through the production of the value-added product during the project. This last sentence here is really key. For value-added products with multiple ingredients, a producer doesn't have to produce a majority of all the ingredients, just one. So that's really key. So up here when it says, the applicant must currently produce and provide more than 50% of the raw commodity that will be used in the value-added product. It's just the raw commodity that you're applying for. So you say you're making salsa that has onions and cilantro and jalapenos and tomatoes. You can use just the tomatoes that you're putting into the salsa, and that's an applicable application, but you have to own at least a minimum, or 51% essentially, of all the tomatoes that are being used in the salsa, not 50% of all the ingredients that are going into the salsa. And that doesn't sound like a big deal, but it actually is a big difference. The applicant types are, again, just to reiterate, independent producers, agricultural producer groups, farmer rancher cooperatives, and majority controlled producer-based businesses. And product eligibility. So the product requirements for this program are, you have to show value added to the commodity, and there's 5 methods which we're going to go over in just a minute. Show increase in customer base and application. Show greater revenue realized due to the value added product in the application. And the 5 methods to add value are a physical state change, that's like defined by irreversible process, like turning apples into dried apple chips, or turning kale into, or turning milk into cheese, something that's irreversible. Enhanced production methods, product segregation, we're actually going to go through the definition of all these in just a minute. Renewable energy, and locally produced and marketed and distributed product. And I will say that probably, I don't know, like 90+% of all the applications that the USDA, at least in this region, receives are either number 1 or number 5. Physical state change, or locally produced and marketed and distributed. And your application wants to just choose one of these 2. That's pretty, you don't have to, but it's very odd to choose more than one. Although one of the applications I did, but I'm on. Physical state change. So these are the definitions of the 5 different things you can apply for. An irreversible process that alters the commodity and enhances value. Not a post-harvest process that primarily serves to preserve the commodity. the person that I was working on this that knows a lot more about this grant said that I should just get rid of that sentence. But I couldn't edit it. Examples include milk into cheese, wool into clothing, livestock into packaged meat. The apples into dry apples, like we were saying before. Physical state change, there you go. Apples, that's irreversible. You can't put those apples back together. Enhanced production. It's a recognized set of production practices when growing a commodity. A different market for a resulting product, increased value for the product over those produced via standard practices. And examples are like getting funding for marketing or transition to organic, or a free range label qualifies for the application. Product segregation, the commodity is separated from other varieties of the same commodity. Separation continues from production to processing to marketing and sale. Example is GMO versus non-GMO. The regional director of the USDA, who's been pretty helpful with us on all these projects and we worked really closely with, told us that he's never seen a single application that utilized product segregation as their focus, nor has he seen renewable energy, which was a little more surprising. But renewable energy is another application qualification. Commodity used to generate renewable energy. No wind, solar, geothermal, or hydro energy sources. That would be the Rural Energy for America project, another USDA grant program that NEPC, a little plug, is having a workshop on December 2nd. But examples for a value-added producer grant are manure into methane via digester or corn into biodiesel, because it's actually a product from your farm. It's being used to generate that energy. And then the final is locally produced. So that's food that's produced and marketed and distributed within 400 miles of the original site or within the state of origin, and must show evidence of increase in revenues versus normal sales or methods. And examples, again, I love that they wrote this, almost anything. The trick is to show customers will pay a premium for local. So, quickly on this subject, this just means, if you want to start a CSA, or if you're going to start marketing product and going to farmers markets, you're, going to get a lot more for an organic pound of broccoli at a farmer's market than the commodity price, the USDA commodity price for just conventional broccoli, and that's a value add. So that's what you use to show that you're adding value, just marketing your stuff locally. Groups or cooperatives coming together to aggregate and market locally will also qualify. So your farm projects, or if you raise eggs or whatever you do, if you are a person who's just marketing locally, you could probably just qualify to help enhance your business, just by the sheer fact that you're a local farmer and marketing your product locally. The product requirements. You have to, again, a lot of repetition. You have to show values added to the commodity with the 5 methods that we just talked about, one of the 5 methods that we just talked about. Show an increase in customer base in the application. Show greater revenue realized due to value-added product in the application. The purpose, eligibility, and use of funds. So again, planning grants, maximum of $75,000, anywhere in between. They can be used to basically hire somebody or fund yourself, or to write a feasibility study and business and marketing plans for a value-added project or product or project. So all the working capital is way more common, and the working capital grants are actually grant applications that are going to fund whatever project you have in mind. We've worked with people who have with Twin Brooks Creamery, who started their own processing and started bottling their own milk and making yogurt, and we've worked with much smaller scale growers up in around Whidbey Island to help with a dry kale chip product line that she now sells down at the Pike Place Market. This last year, we worked with 2 mung growers in the Snoqualmie Valley. One who made lavender oils and took her lavender and turned it into lavender oil projects. That was a working capital grant. But as we're gonna see, any grant over $50,000 will require a business plan and a feasibility study. One criteria of it is gonna require a third party to do it. So most people are gonna just go, and it makes most sense just to go straight into the working capital grant. But there are reasons, like if you have a really big project in mind, you don't, really have the desire to write an extensive business and feasibility and financial plan for it, the planning grant can be a good option for you because it's actually it will provide funding to have somebody else do it for you, like NBC, we do that kind of work, or Business Impact Northwest can do that kind of work for you too. Again, the working capital grant will cover operational expenses, but it cannot cover production expenses or equipment. Eligible expenses for a working capital grant. Processing costs, labor, utilities, ingredients, packaging, labeling, purchase additional raw commodity. So you have to, again, remember, you have to provide more than 50% of the raw commodity, but you can use the money to purchase the rest of it. Advertising, promotion, financial accounting costs, web development. That should also save office supplies because it can also be used to buy computers for the value-added business, and office supplies for it, and distribution, shipping, and delivery. A good note to note is when I said that it would not, this would not cover like buying equipment or vehicles. It's true, it doesn't, but it would, like, for example, it will cover leasing like a refrigerated truck during the time of the grant. It will, but you cannot lease to own, and they will check up on that. People have tried that before. They will really check all your paperwork if you are leasing a vehicle to make sure that you're just renting it or leasing it. Ineligible expenses, construction, equipment, vehicles, costs related to production, harvest, delivery of the commodity. That's kind of confusing, I'll get back to that. Engineering and architectural design. That's confusing. The best way to describe that, the cost related to production, is the grant can be used to get your finished product to a grocery store or a restaurant, but it can't be used for anything that gets the product from the field to the processing area, or from the field to a packer. So it's all post-harvest, and it's all about the after it's been harvested and processed and is been processed into the value-added product. The money can be used for that delivery, but not anything before. Yeah.
What about if you wanted to run your product, your pro forma product by the Oregon State food testing, that lab they have in Corvallis?
You mean your finished value-added product for food testing?
Well, it's consulting, so, I can't remember her name. Anyway, her team assesses it and say, okay, it's this niche, you can change your flavor it's consulting. Could you use this for consulting, a sub-consultant?
That's a good question. I'm not sure about the answer to that.
So if I get your email, can I just email you there?
Yeah, I'll give you my card after. I can certainly find out.
You understand the question though?
Kind of, like consulting
They're food consultants.
Food consultant on
your product.
On the product. Yeah, no, I do understand the question. And I don't know the answer to that, but yeah, I can certainly find it out. I would think that maybe.
Wouldn't that fall under the planning more?
It would definitely fall under the planning part, I would imagine, it would be an expense of the feasibility and business plan. So, yeah, it would definitely fall under a planning grant, but not necessarily a working capital grant, but that's a good question. So the match, this is a really interesting part of it that people get kind of a little skittish around, but whatever you apply for, you have to provide a match equal to the grant amount. So if you're wanting, that means if you want to, you say, get $100,000 from the USDA, you actually are going to apply for a $200,000 grant, and you have to provide matching funds. And we're gonna get into there's a lot of ways that you can get around actually having to, take $100,000 out of your account. That is one way you can provide match, and the USDA loves it if you're gonna do that, but you don't have to do that, and probably, I don't think anybody does. The way that most people provide that match, which we'll get into in a moment, is through your in-kind labor and then the commodity that you're using to make the product.
And Luke, is it over a 2-year period or a 3-year period for the total?
Yeah, that we're gonna, sorry, thanks for, it can be 1, 2, or 3 years. Most common is 2 years. 3 years, I would really highly recommend at least 2 years. But it can be the grant asks you to ask, the project can be 1, 2, or 3 years. So yes, the matching, so it has to be spent only on eligible expenses, no equipment, or production match, spent in advance of the grant draw request, no conflict of interest, and verified at application and confirmed at award of what that match is. And the eligible sources to provide the match are applicant cash or loan, which is basically directly the applicant ponying up the cash, or proving that they got a bank loan to cover that match. The value of the raw agricultural commodity, I'm gonna give you a few examples of that in just a moment. The applicant or family member in-kind contributions, third-party cash, meaning family gives you money or something, or some family friend or something, or third-party in-kind contribution. So most people for the match use number 2, 3, and I hate to say, I am not super sure what the 5th one means, third-party in-kind contribution. I can conjecture, but I would imagine that's just somebody who qualified as the third party that had something to do, I guess, actually, no, I take that back. That would be if somebody's providing services to you that are qualifiable within the grant application, and if they're gonna be willing to do that for free, essentially to provide their labor as in kind, that's what that means. But the most common, what most, probably 95% of the working capital grants, the applicants are gonna put up the value of the raw agricultural commodity and the applicant or family member in-kind contribution for their contribution. And the value of the raw commodity, an example of that is like if you're applying, you raise beef and you are applying to basically process your beef and sell it. That's totally something you're taking a live animal, and maybe you've always sent it off to a USDA facility, but you're getting a USDA facility set up on your property, or even if it's custom exempt, you're going to be taking that beef and cutting it up and selling it. That's a justifiable application. The value of that steer, whole before it's cut up, is your match. Like that would qualify for the match if it was a steer's like $2,500 these days. So if you're gonna put up, your application saying you're gonna process 10 steers at $2,500 a piece, that's $25,000 as as your match. But that's just one example. Also, if you're an apple farmer and you're transitioning from conventional to organic, and the value of, and you produce 100,000 pounds of apples a year that were once at the conventional commodity price is $1 a pound, that's $100,000. That's your and you're going to show your adding value because the organic price now, commodity price is $1.50. There's your value add right there. But those 100,000 pounds of apples that you're providing to transition, the conventional commodity price is $100,000, that's the value of your match. That's an example of using your raw commodity. And again, just, you know, the tomatoes that you grow are going into a salsa. The value of that, just that tomato that's going into the salsa can be used as your match. And that can be used in all kinds of different applications. And the applicant or family member in-kind contribution, this line down at the bottom here is kind of key, that the applicant and in-kind is limited to 25% of the project cost. People often get that mistake, this actually happened to me recently, that I took that to mean it can be 25% of the match, but it can be 25% of the whole grant. So remember, if you're wanting $100,000 from the USDA, you're applying for a $200,000 grant. So the in-kind contribution is 25% of $200,000, not of the match. Does that make sense? Yeah. And so it's actually 50% of the match. So between, you know, being able to put up 50% of your time and labor as your contribution, and 50% and the raw commodity, you know, as the other part, that's the way that a majority of the applicants get around actually having to take money out of their wallet to provide the match, and that's the most common, and it's really not that complicated to do once you're getting into a project like this. Like the in-kind match and the raw commodity match is really easy to justify, and yeah, application requirements. I need to take a drink of water. Working capital grants. I think they just put simplified applications in there because, yeah.
So do you have templates and examples? NABC, do you have templates and examples that a person could look at and say, here's what someone did? A generic stuff, or is it all proprietary?
Yeah, no,
Do you have any
in fact, you can go, all the
sanitizers?
USDA grant programs,
Okay.
you can go in and you can go into their website and you can see past grants that were awarded and all the reports on them. That's a key point there. We're talking just about the value added producer grant today, but there's a lot of USDA grant programs out there, and NABC does a lot of work, and we're putting on workshops on all of them, so please take my card afterwards, and if you're interested in anything else, I can follow up with you and send you, you know, the different workshops we're doing on other USDA programs, including the value added producer program. But one, you know, the one thing that we always recommend before you apply for any federal grant is just go onto the website, and all the past awarded grants from the year before and all, like for the last 10 years, are all available from every state. And not only the actual grant applications themselves, like a little summary of them, you can see the actual full application itself, you can see all their reports, all the, you know, the grantees' reports. It's a really helpful way to, you know, learn how to write these grants, because they are beasts, this one in particular. And again, we have a really successful track record and a lot of experience writing successful value-added producer grants. So simplified applications, even though I'm saying they're complicated, keeping the information, just sticking to the point, not getting too carried away with, you know, just sticking to the facts is always key for these grants. Market expansion, emerging market applications. Oh yeah, I'm sorry, they were just saying keep it simple. A simplified application is an application that's under $50,000. If you're applying for under $50,000, you do not have to provide a business and financial plan or a feasibility study. Most grants over $50,000, actually, I'm sorry, all grants you apply for over $50,000 have to have a business study, a feasibility study, and a financial plan, which is part of the business plan, attached to the application. The difference that we'll get into in a minute is whether you have to hire somebody else to do that for you, which one form of the application you do, and the other one you can do it yourself. So yes, grants for less than $50,000, all four applicant types are eligible, no feasibility study or business plan required, customer base expansion and revenue increase still covered in the application, that still has to be proven.
And Luke, the funds can only be used once they're allocated, nothing can be used retroactively, correct?
Yes,
So like if you paid for a feasibility study, right, and then you get the grant, you couldn't then use that as part, like,
the feasibility study and
Yeah.
and you can use, once the feasibility study's done, it's yours. So you
Right,
can use
but-
that for, is
but
that
could
what
you
you're asking?
expense that as part of the grant, or is it only once the grant's allocated that time period, all the expenses in there, nothing retroactively from previous expenses you could get reimbursed for?
Oh, yeah, no, you couldn't get reimbursed, you mean for the project, like
Sure.
if you've
Yeah.
had like I'm not quite sure I understand your question. I mean, if you get a planning grant and you use it to have a feasibility and business study done, or business plan done, what is you, I'm not understanding your question.
Right, so if you have expenses that would qualify as part of the grant, but you're still doing value added development and all that stuff and production costs before you actually announce that, you received the grant, how far back do those previous costs can you expense towards the grant, or is it just like from the point it's awarded till that 3-year or 1 year or 2 year window or whatever?
Okay, yeah, no, it's just from the point that
Okay, got it.
it's awarded, yeah. Yeah, sorry, that was not that hard to understand. I just throwing the business plan in there was throwing me. But yeah, it's only from the point, like once the grant's
There's a set
awarded.
start date.
Yeah, then you go through a whole contractual period with USDA that, and then you sign a bunch of things back and forth, and then there's an actual start date to the grant. And I say that there are, not like way back for anything, there are some examples where, they do allow for, I shouldn't probably say this, I think there has been examples where within the past few months, and you haven't, if you've, and it does qualify for the project, they might let you turn them in, but not like you've been doing a value added line for years, and it's like, oh, can I turn in some receipts from 2 years ago or something? There is a little bit of gray area there, but technically, it's the day the grant starts, that all the receipts are supposed to be dated after that.
Okay. And if you had, what about, like if you got a REAP grant, you put in solar and you're paying off a loan, and that's your electrical expense, would that be able to count under electrical, or would it not, because you're just paying for the solar panels that you now own?
Yeah, that's a good question. I'm gonna, unfortunately, I'll be honest, the person who really is the savant with our VAPG program is in Mexico. And I've done this a lot, but I don't know all the answers to, I knew questions like that were gonna come up. But what I can do is if you can just just email me after this, and I can find that out for you. It's really common, there's so many different USDA programs out there and a lot of times they're really similar, like the project or the purpose of the grant is, pretty similar to what, and a farm or a farm group is gonna apply for a bunch of different grant proposals, because you don't know if you're gonna get one or the other, so you kind of have to, you apply for similar projects for different grant applications. There are ways that you need to kind of differentiate, and USDA does want reporting on making sure you're not kind of like getting funded for, for two separate grants for the same thing. So that is something to consider, but there's also, they're really great about communication, like you can really communicate with USDA representatives. They understand what I just said, that there's like all these different programs and the applicants don't know if they're going to receive their grants. So they run into this, what you just brought up, oh, I got a REAP grant and I want to use it. They run into this a lot, and they're great about communicating and coming up with solutions. Really great about communicating and coming up with solutions. So again, just follow up, and I can definitely find specific answers to things that I don't know for sure. So emerging markets, grant requests of $50,000 or more. Need producing a marketing value added product. So emerging market grant, you have to have been producing or marketing the value added product for less than 2 years. All applicant types are eligible. A feasibility and study and business plan required with the application. I'm sorry, the independent feasibility study required. So that means that you need to hire somebody to do, you need a third party to do your business plan and feasibility study. You can't do the business plan yourself for this tract here. And this is the only difference between a market expansion grant and an emerging market grant are whether it's a new producer or a new somebody new to whatever the project you are applying for, or if you've been doing it for over 2 years. If you've been doing it for under 2 years, they require a third party to do your business and feasibility study. If you've been doing it for more than 2 years and you're just trying to get funding for what you've already been doing, you can do the business plan feasibility study yourself. Market expansion, it's basically again the same as emerging market. It's just that you have it's for a grant request of $50,000 or more, the applicant must be producing and marketing a value-added product for at least 2 years at the time of expansion, not under 2 years. Another criteria for this is that independent producers only are allowed to apply for these grants. So no farmer cooperatives, no farmer groups, only independent producers, and the business and marketing plan required, but not a feasibility study, and the farmer themselves can do that business plan. So, just to kind of run through the application contents, and all these are, the application itself is available online. And you can kind of look through, the 2022 has not been announced yet, but the 2021 value added producer grant, you can look at the toolkit and all the instructions. The thing that you want to note is that the application is actually called the toolkit. So when you go to the website, just look for the toolkit, and that's what the application is. But you're going to find a narrative description of the project, the goals and the tasks, the budget and the costs for split among the categories, labor, it's all pretty well laid out for you to help you organize what you need to do. The identification of key personnel responsible for the tasks, the timeframes for the tasks for the entire project, sources and uses of funding. So this is a key thing, and it's kind of crazy because it's going to change, but the application for federal assistance is just another, there's a lot of like random little forms that if you're not versed in it, it's there in the toolkit, but that you need to fill out, and you need to know that that has to be included with the application. And that's why it's great to get somebody like NABC to help you with the applications, because there's a lot of just little things that aren't totally obvious in the application. The key thing that I want to emphasize to all you is that you need a DUNS number, and you need to get into the system for awards management system. That all being said, in April, that's changing, and I actually have a little information on that I didn't put into my little outline, but I'll at the end I'll bring it up on my phone. But if you all don't have a DUNS number, that would be the first thing I would do when you get home tonight, is go just look up DUNS and get your business registered with DUNS. And then look up SAM's System for Awards Management and get yourself registered with that. Because both of those numbers are required for any federal applications. And the one, and it's a pretty straightforward process actually, it does take a little time. Another suggestion that I give you is do everything exactly the same. Like if you write out the word street in your DUNS application, write out the word street, and when you put in your system for awards management application, just do everything identical, because if there's little things off, it's just that it can really throw them, and you have to get your DUNS number first. That is, all of this is gonna change in by April apparently. However, I think that the next value added producer grant round is gonna be announced real soon. That's the word on the street, and so to apply for the next round, you're still gonna need these two numbers. Here we are, should have done this at the beginning. But the eligibility, just the miscellaneous stuff about it, the grant period, 2 years standard, 3 years maximum. But that's interesting that they say that, because it can be a 1-year grant, but most people, 2 years are standard, 3 years it's a 3-year maximum grant. When you do, even if it's a 1-year grant or a 2-year grant, the USDA is pretty flexible about allowing you to extend it. If, you know, I just was involved with a meat producer group that had a bunch of crazy stuff happen to where they were doing their business and they had to, change the start date. They had a 2-year grant and they had to change the start date 8 months. But, the USDA understood, and they're, as long as you go through all the proper channels to make changes, they're pretty flexible about it. The application being totally complete and all the numbers and the different forms that were just on that last page, everything that they ask for is super important. And I will say on that note, digress a little bit, one thing I've learned working for NABC and from our fearless leader and grants in general is I'm a lot of farmers are kind of wild right brain creatures, and they get a question and they'll just be like blah 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 blah. Try to use the language when there's a question in a grant, answer it exactly like it asks. Like if there's a multi-part question to a grant, use the same language, or even if they have it, like bulleted a certain way, bullet it the same exact way, use the words that they use in the question, answer exactly what they're asking in the question in the order that they're asking, and don't say anything else. Just answer the questions. Don't expound, don't go off on tangents, just answer it and use the language and answer it in the exact order that they're asking in the grant and the question. Multiple grants, that gets us to Griffin's question, discussion a little earlier. Multiple grants must have a different application type or value-added product. It's meaning you can't get two value-added producer grants for the same thing. Great, and you can only have one active grant at a time. Another little for number 3 here. For multiple grants, and number 4, you can only have one at a time. Here's another really good tip that I learned from the VAPG Savant. What a lot of people end up doing, and I want to caution you against this, like if you, a great example is there was a dairy that applied a while back, and they applied to make flavored milk, like naturally flavored milk, and they applied to make strawberry milk, vanilla milk, and chocolate milk. And they got a $250,000 grant to do that, successful grant. However, they could never apply for any of those again, whereas if they would have just applied for chocolate milk, they probably could have gotten a $250,000 grant to get their chocolate milk line all set up. And the following year, they could have applied again to make more money, to get more money for their strawberry milk line. And then the year after that, they could have applied for their vanilla line. So if you have, a lot of ideas and a lot of different products that you want to do, just do one at a time, because you can apply for a grant for every different, you can apply for a chocolate milk grant, a strawberry milk grant, and a vanilla milk grant, if that makes sense. Project timeline. So the application, well obviously there's the announcement, assemble the application, submit to rural development reviews. I do want to emphasize at this point, the earlier you can get this grant done, the better. Like if you can get it done a month in advance, that is awesome. Like, get your whole grant done a month in advance, and then you can send your grant to your USDA representative, and they will review it for you, and they will provide when I first started in this work, I thought like, oh, I can't get help from the USDA, that's like a conflict of interest. Like, they're not gonna help me, and they do, it's amazing. They want, like, your regional representatives want you to get these grants. It's good for them, that's what they're in the business for. They have these amazing programs and they want you guys to access them, and they want you to be successful. So they want you to put good, solid applications in. So if you can get your grant application all completed, you can send it off to your representative, and they will review it for you and provide comment, which is super helpful. And generally, almost always results in a successful grant application if you can get that in on time and actually make those changes. So rural development scores and competes. They give you the notification, the obligation paperwork. That's what I was talking about before. All the contracts and everything. The project conducts, the matches start. It's a reimbursement grant, so you actually have to spend the money yourself and then just turn in receipts for reimbursement. And I think during the obligation process, you can set up how often that's gonna happen. Monthly is common. I think you can set it up to happen quarterly too, but monthly is most common. And I think it can't be I think it has to be monthly or more. It can't be like, it's not weekly. The reimbursements, and then the reporting. There's always reporting with all your grant applications. Scoring considerations. Nature, it just meaning like what they see is, what they want to see, what a strong application is. Nature of the project, is it technically feasible? Operational efficiency, is it going to be profitable? You're showing it's going to be profitable. And are you, a big part of the language of the grant too, that you want to throw out there at the appropriate questions, is to show how you're going to sustain this project after the grant funding runs out. That's something that they really want to see and shown that's proven. The qualifications of the personnel, meaning, are you all, whoever's applying, do you have the experience to pull this off? And that's just, there's a bio part where you put in a bio and you submit your resumes too. Commitments and support, cash match, commitment from end users, suppliers. They love cash matches, but it's not, they never get them. So that ranks high, but they rarely get cash matches. So don't worry about that. But the commitment, like the customers that you're identifying in your grant application, the getting letters of commitment from those people, really great for a value-added producer. Like, especially if you can get somebody to say, this is a great idea, I'm gonna buy 100,000 pounds of this a year, I'm gonna buy, $10,000 of this a week, or if you can get an actual monetary or quantity commitment from a known end user, a legitimate qualified end user, a store, restaurant, whatever, that's real strong. Obviously the work plan and the budget, they want to see that it makes sense, it flows well, the timeline is great, the money matches up. And priority points for being a beginning farmer and rancher. And that is somebody who's farmed for less than 10 years. And even if you have farmed for more than 10 years, just so you should know, if you have not filed the Schedule F, like maybe you farmed for 20 years, but you just started filing a Schedule F 8 years ago, you're good to go. So it's whenever you first filed Schedule F, that is how you prove, whether you're a beginning farmer or rancher or not. And that's a 10-year threshold. Priority points for socially disadvantaged applicants, veteran, and small and medium farms. There is a threshold for, I think, a monetary threshold for small and medium farm that maybe somebody in the audience knows what it is? Because I don't. I'm not like testing you all. No? Anyone? Bueller? So yeah, I mean, just basically that's just a checkbox right at the beginning. Are you any of those? You automatically get, I think, 10 points for being in any of those categories.
if you were a veteran and a beginning farmer, would you get 20 points?
No, yeah, unfortunately, it should be, but yeah, you can only get that one question, 10 points if you're any of those. If there's any, husband-wife farms out there, this is appropriate not to be, categorizing, but, if Sarah and I, my wife and I, did this for our business and for our farm, we switched ownership, she has 51% of the business, and I have 49% now. That takes us into the women are kind of crazy, but women are in the socially disadvantaged category, so just another little suggestion and figure out a way to get proof of that. I couldn't find, I ended up, the person who processed our, that switch, I literally had to just get an email from her proving there was no document at the Department of Commerce or at the Secretary of State that showed that, but I ended up getting an email from the person who processed it that is my document to prove that that's the case for our business and farm. That is it. Again, I have my cards up here, but this is, if you wanted to take a picture, these are all your local USDA representatives, and again, they're incredibly helpful. We, NABC, again, is a nonprofit organization. We provide one-on-one assistance with these grants. We also provide workshops on the grants, and we have in the past, and we're working on it again, working on what's called the VAPG boot camp, where it's a fee-based process where over the period of a number of months, you get together and actually work on your grants. We're not offering that right yet, but stay tuned. It might, we have done that in the past, and it might be happening again for this next round of the VAPG. So that's the conclusion of my ramble, but hi Glenn.
Hi Luke.
How's it going?
Good.
Good.
One comment and then a question. The comment is that women still are socially disadvantaged.
Yeah, I didn't mean it that way. I just, yeah, you're right.
But the question is, I know for a lot of USDA grants, they require a pretty robust evaluation program, or that you say how you're going to evaluate the success of your project. And I'm wondering if it's the same with the value added.
Yeah, totally. Yeah, it's, it's funny, I know exactly what you're talking about. And it's not, all USDA grants are really repetitive. Like, you answer the same questions over and over and over again, but I think there's a method to it. I think it does, by the time you're done with one of them, and you really you got a good plan in place.
You have a good template?
You have a good template, and it's really the process really makes you think through the whole thing. And yeah, there's definitely the criteria that how are you gonna evaluate the success. But then implicit throughout it is just they just really wanna, you're needing to prove that it's gonna work. That's just part of the grant application itself. Yeah. Anyone else? Cool, well, thanks a lot, everybody. And I think there's evaluation slips on your, oh yeah, great. Over in the corner.
I'll set them around.
Thanks a lot for your help. Stacy, thanks so much to Telf Alliance. I forgot to say that at the beginning, for all your years and all the amazing work Telf has done over the years for the farming community and the state. We've been long time members and lovers of Telf and everything they do, so thank you very much. Thanks everybody for coming. And I have cards up here if any, I'd love to pass them out. Please follow up with me, and I can get a lot more information to you than what we could go over in an hour here. Thanks again.
I don't know.
Or are they not? Nate, do you have the Spanish one?
I'm not sure.
Okay, you may be on. They're white. They're white sheets.
You know, that kind of, I mean, on just ballpark, $35 an hour, but we have other, you know, basically, we can provide, free consultation to see like. Yeah, does that make sense, or what's the situation, you know, we kind of have like scales of efficiency, but we also have the one that just work with us, they're on, and